And we did hear testimony about ways folks are trying to, work the system. But our recommendation is to drop today at the $3 million level. 82% of the tax collections are at the minimum $175 level. We want to get down to where the percentage applies to that income. And finally, we recommend dropping the top corporate tax rate from 6% to 5.8%. And the reason is, when I get to personal income tax in a few minutes, we're recommending dropping the top rate there to 5.8%. And you have to have your corporate level and your personal level really aligned, since there's so much flow through to the personal level. We favored two of our signature industries with recommendations. The first is the horse industry. Did you realize that today there is no sales tax on antibiotics for cattle, pigs, or chickens, or no sales tax on feed for those animals, but there is for horses? We recommended we looked at both ends of that, and that is, do you tax the others or do you exempt the horses? And our conclusion was to recommend the exemption of the horses, which is about $14 million estimate. In the bourbon industry today has 7 taxes, and if you look at states that are the main producers of bourbon or wine or beer, and look at the taxation levels, Kentucky kind of sticks out like a sore thumb of really taking advantage of one of our signature industries. And we recommend changing 2 things. One, there is a personal property tax on those barrels sitting in a warehouse and sitting there aging for years. And that personal property tax is going primarily to local school systems. Our recommendation is that we provide a credit on that local property tax against the state corporate income tax. That's about a $13 million item. And secondly, we recommend repeal of the distilled spirits case sales tax. That would address 2 of the 7 taxes in the bourbon industry. The next bold or strategic recommendation deals with sales taxes on services. We have sales tax on a lot of products today. Kentucky also has sales tax on 37 services today. The National Tax Administrators Organization identifies 183 total classifications of services. And those include both things that are household consumption and business to business. Our consultants strongly recommend, and every state who's tried to put business to business taxes, that is a hornet's nest and a place to stay away from. But our recommendation is that you focus on expanding the number of household consumed services, or services to where you're paying a sales tax on a product. Like you put a new muffler on your car, you pay a sales tax on that. You don't pay a sales tax on the installation fee of that muffler. There's an example of the kind of thing. This is an area in which our recommendations suggest let's try to stay as close to those things that are considered luxury as possible. And the reason is, if you stay toward the luxury items, then you work against the regressivity curve that I've already mentioned. We're not taxing country club memberships today, for example. We're not taxing tanning booth services or workout clubs. We're not taxing first storage. We're not taxing limousine services, all of which are services in that category that you might classify as luxury. We provided some guidelines to the General Assembly, but did not spend the time, frankly, to get in and say, okay, here are the 20 we would recommend. But between the 37 that are currently taxed in Kentucky and the 183, I think there are 80 that are very good opportunities for the state to deal. And one of the things this does is what the consultants say you've got to do to increase elasticity, and that's broaden the base. And frankly, there are 2 chief recommendations in our recommendation of the General Assembly that deal with base broadening. The service tax is one of them, and the other one deals with retirement tax, which we'll discuss in a few moments. Now, we recommended several new or increased taxes. We recommended a 1% tax on residential and business utilities, where the $101 million that would be produced are targeted specifically for the SEEK formula. We recommend increasing the tobacco tax to $1 a pack from 60 cents a pack. Now, we also found by testimony to the Commission that there are a number of efforts that have happened in the tobacco industry to skirt the tax. and that now they're selling cigars that look just like cigarettes but called cigars and are not taxed the same level. And then you've got some skirting going on by the make-your-own and some skirting going on in the pipe tobacco area. The recommendations of the Commission are to make all of those level at the equivalent of $1 a pack. Now, the $1 a pack is not a competitive problem when we look at the states to the north of Kentucky. And most of our people live on the borders of the state of Kentucky, and the heaviest population are on the northern borders. I should call to your attention, however, that the Tennessee border, Tennessee is charging 52 cents a pack, and the $1 a pack is going to create a competitive negative for those folks that are along the border. West Virginia charges 55 cents, and Missouri 17. But we have very little population bordering Missouri. But the West Virginia border and the Tennessee border, we're likely to have some kickback. These recommendations total $128 million incremental income. Now, one of our recommendations is not in the total, and this one deals with taxing interstate internet sales. Today, how many of you during the holidays ordered something for Christmas over the internet or through a catalog and did not pay a sales tax on that? Well, under Kentucky law, you owe a use tax equivalent to sales tax, but how many of us have logged those and are prepared to add that to our tax return to the Commonwealth of Kentucky? I dare say very few. And that's clearly understood. It's estimated that there's 150 to 200 million, and that's purely an out-of-the-air kind of an estimate by our tax authorities. There are today 2 bills in Congress in Washington to address this issue, and it's finally gotten to the point that the streamlined sales tax process has enough maturity to it that it is reasonable to assume that a standard nationally could now be applied. We recommended imposing a pari-mutuel tax on a thing called advanced deposit wagering made by Kentucky residents. I can now make a deposit in advance, kind of like creating my bank account out there, and draw on it through these electronic pari-mutuel activities. And we recommended applying the sales tax to that service. When you rent a hotel room today, and you rent it via Hotels.com or Travelocity or Priceline or what have you, they've negotiated a lower price than you would be charged if you went straight to the hotel. Well, today that sales tax is applied to the lower price. But there's also a higher price, that there's a gap in there between what the hotel gets and what Priceline gets. And today Kentucky is losing out on that differential. We think the sales tax should be applied to the gross number, not to the net number, and we recommend a bill to that effect. That item has been tried by some other states and is being litigated by other states. We think we need to become part of that national movement. From an administrative standpoint, our Department of Revenue made 21 recommendations, and we approved 19 of those. A couple of examples. The first one is to allow non-renewal of professional license, driver's license, vehicle registration for delinquent taxpayers who have exhausted all of their appeals. If I'm a delinquent taxpayer, I've gone through the appeal process to make my case, and I've lost at the appeal level, and I still haven't paid my taxes. We recommend that you not have other rights of being a citizen, and that those be non-renewed on those normal rights. Another example is today we have interest factors when you owe money to the state or when the state owes you money. But today there's 4% difference on that. Why should it be different for what the state pays me versus what I pay the state? So we recommend going to a balanced interest rate for both parties. Our third bold or strategic move deals with local taxation. Kentucky is unique in the amount of our tax that is collected at our state capital. Actually, the only state bordering us that comes close is West Virginia. We today collect 66% of all of our taxes in our state capital. Our adjacent bordering states run from 45 to 53%. In other words, our bordering states provide more options for local governments to pay their own way and to raise their own funds. Those of us who live a long way from the state capital in Kentucky, have often commented about the price we pay to get on our pony to go all the way to the Capitol to beg for our share back. And we have to do that with 2/3 of those dollars collected centrally. We recommend, our strongest recommendation is that we allow a local option sales tax. At this point, 38 states in the United States have allowed a local option sales tax. That cannot be done in Kentucky without a constitutional amendment. So in order for this to be considered, we must first have support from the General Assembly to put this on the ballot for the voters to vote for a constitutional amendment. And then if a constitutional amendment passed, then it's up to local political leadership to propose packages to their local constituents that would support a program. For example, it might be a 10-year, a half-cent tax for 10 years for a specific significant project in the local area. I live part-time in Florida, and I've witnessed great success with these programs in the last few years in 2 neighboring counties down there. One in adding technology in the classroom, and the other one to 4-lane a bridge that hasn't had funds available in the road fund. And so they did a local match with a local sales tax saying, this is our priority. And so I think the power of the local leadership saying this is important to us and then getting that approved locally is significant in the long term for Kentucky. The second item deals with House Bill 44. In 1979, interest rates were in the 18 to 20% range. Prices on real estate was going through the roof. And our General Assembly set a cap on what could happen on real estate taxes in Kentucky. A very wise move at the time. If you look at what's happened since 1979, you'll find that our property taxes have continued to decline year after year after year, both at the state level and at the local level, the sum total of that. There is today a 4% option, and if you go above the 4%, then there's a recall right that the voters can recall the increase by the local agencies, primarily school boards. We recommend the elimination of the recall provision. We have school districts in this state where the county is growing and booming and having volumes of new students to go to the schools and can't raise the funds to build school buildings. We think that there needs to be relief locally in that regard. Our fourth bold and strategic recommendation deals with personal income tax. The personal income tax is the only tax that we have in the Commonwealth that can work against the regressivity that comes from the rest of the taxes. And so as I talk about the elements, there are 4 separate elements of our recommendations on changing personal tax, and all 4 of them are targeted to work against the regressivity curve of the 10.8 to the 6.1 that I mentioned earlier in these comments. Let's talk now about itemized deductions. Today, we allow itemized deductions on our Kentucky tax return similar to what you do on the state return, and our top rate is 6%. Well, if we look at the adjoining states in Kentucky, now Tennessee has no personal tax at all, so you don't have any comparison. But if you look at Illinois, Illinois has a 5% tax, Indiana 3.4, Ohio 5.9, West Virginia 6.5. Did you realize that none of those states allow you even the $1 of itemized deductions? So if you're thinking you're comparing their rates, our rates to those rates, there's no itemized deductions in any of those border states. Now, frankly, I started with a mission on personal tax that this was our great opportunity to simplify. And if we eliminated itemized deductions, we could drop our top rate from 6% to about 4.3%, and we could go with a postcard tax return. Now, my concept didn't win, and I'm going to explain why in a minute, and I support the resulting conclusion. But on the itemized deductions, We started out with the idea of totally eliminating itemized deductions, and one of our commission members, who's involved in supporting public education, said, we've got to have some dollar amount out there. And so the agreement was a $17,500 cap on itemized deductions. Whether it comes from mortgage interest or property taxes or contributions or medical costs is immaterial. It's just a $17,500 cap. When you plot itemized deductions, and I meant to say this a moment ago, but when you plot itemized deductions, frankly, they grow in proportion to income. They grow greater than proportion to income. So the higher the income, the greater the probability of a significant use of itemized deductions. At the low end, it would tend to be a standard deduction, not an itemized deduction, a low end of income. So if you eliminated itemized deductions, frankly, you're working the other way to balance the regressivity scale because you're taking away from those with more income and shifting the burden. The next subject is retirement income. And this subject has a significant history in Kentucky, and it's not all pretty. In the 80s and 90s, Kentucky allowed a 100% exemption from tax for your retirement income working for state government. So if I work for state government, I'm paying 6% the day I retire. The next day I pay 0 state tax. Well, federal workers didn't like that, and they appealed it, and they were granted equal rights. Military workers appealed it, they were granted equal rights. Some of the retirees from Ford Motor Louisville appealed it, and they were granted equal rights. And in the mid to late 90s, the General Assembly said, wait a minute, we got baby boomers retiring, the retirement's growth, and so personal income returns were reducing because we got a growing retired age population in the state, and that's just going to continue to get worse. And in 1998, the General Assembly came to terms with that and said, we cannot tolerate continuing what we've been doing.